Welcome back, everyone. Next, we have Challenger Gold Limited. It trades on the ASX under the ticker CEL and the OTCQB under the ticker CLLEF. And its aspiration is to become a globally significant gold producer. Please welcome its managing director, Kris, as well as the executive chairman, Sergio Rotondo. Welcome, gentlemen, to the Emerging Growth Conference today.
Thanks for having us, Anna.
Thank you, Anna.
And good morning, everyone. I'll just scroll through to the presentation. Sergio and I will do a bit of a sort of swap up. I'll talk to some slides. He'll talk to others. So Challenger Exploration, quick snapshot. 2 projects, both in South America. Lead project is our Hualilan gold project in San Juan, Argentina. We've taken that from historical drilling to a 2.8 million ounce gold resource. It's got a high-grade core of 1.5 million ounces at better than 5 grams. It will be Argentina's next mine. Mineralisation still open in all directions. In Ecuador, we have a large porphyry project. Again, we've taken that from really grassroots exploration through to a 4.5 million ounce resource, and that's potentially a tier 1 asset. We've drilled 3 of 15 major anomalies there. The company itself, market cap of 100 million Aussie or 65 million US, trading around about 25% of the valuation our peers are, simply because we've got South American assets. We've just taken $10 million from 2 strategic investors, so we've got a runway. And in terms of who are we? So my background, exploration geologist. Got into investment banking initially as an analyst, spent 10 years in investment banking, and then sort of got back into the mining side, led the listing of a package of assets. We had copper gold projects in Saudi Arabia, started market cap at 3 million, 6 years hard work. We took that to $1 billion exit. I'll pass over to Sergio Rotondo, our executive chairman and my sort of fellow co-founder of the company, and Sergio will talk to himself and Sonia, who are probably the 2 most important people in the company.
Thank you, Kris. My name is Sergio Rotondo. I was the former owner of the asset. I rolled the asset to Challenger into shares, 100% shares. My core competencies here, it's government relationship. I have a very strong background in construction of big things. And I'm going to talk about Sonia Delgado. She's executive director of the company. She's our person on the ground on Argentina, and she has all the contacts we need in San Juan at the national level at the same time. So we are very happy to have her on board as well. Kris?
Thanks, Sergio. Major shareholders of the company. So the biggest shareholder is BlackRock Investments. They're the largest resource fund in the world. And then the other key, and look, this is very important if you're investing in small mining companies, the management team combined, we own about 17% of the company. Sergio and I own 6.5% each. As Sergio said, the other owners of the project took cash, he took shares. I funded the company for the first 1.5 years, so we've got some serious skin in the game. Our interests are aligned with shareholders. We lie awake at night thinking about how we can improve the share price, how we can advance the company, not, can we get a salary increase from $200,000 to $300,000 a year? And then, what have we done? We IPO'd 5 years ago. What have we delivered as a management team? We've got a track record of doing what we say we'll do. So in Argentina, we've done 2,400 meters of diamond core drilling. And really, if I didn't have Sergio and Sonia to do all of the heavy lifting in Argentina, we probably would have done minimal diamond core drilling. But with them, they manage the landscape. We've made a 2.8 million ounce gold discovery, which is open in all directions and getting better. We've demonstrated a clear pathway to production. The NPV of that project, on our scoping study case is $600 million. It's low capex. And more recently, we've identified this exciting 5-kilometre long copper exploration target. In Ecuador, similar story, 40,000 metres of core drilling. We've increased our footprint there from not much to 35,000 hectares. We've done the same thing in Argentina. We now own the entire sort of land package. We've taken the project from nothing to a 4.5 million ounce resource. And we've got a significant target there that we're drilling now, which we think, will significantly increase that resource. Next slide. So look, this is just a before and after shot. So this is us October 2019, the red circle there is where we're drilling our first hole. The yellow circle, that's just the point of vantage where we're looking from in the next photograph. And then you scroll forward 2 and a bit years. This is what 200,000 metres of drilling looks like. You can see the roads. That was our first hole there in red. But we've done a lot of work and delivered a lot since IPO. In terms of, before I introduce Challenger, I might talk about the market itself and where we are, because it's created a tremendous buying opportunity. So I pinched this slide from Lion Selection Group, which is a very clever fund down in Australia. So what that is showing is the Australian Gold Index, or the gold producers in gold, and the gold explorers in orange. And historically, these two indexes track each other. And you can see there they did up until around the start of 2022, when you had the gold price fall from 1,800 back to 1,600, you've had this big divergence. So what's happened is the gold producers have sort of performed well. You've had a nuclear winter in the explorers and developers like us, and you've got this massive disconnect in the value. You roll into 2024 with gold going from 1,800 up to 23, 2,400. The gold producers have continued to sort of re-rate and go higher to the point now that they're pretty fully valued. And you've had the developers and explorers like us have continued to track along the bottom, and it's really only in the last 3 or 4 months that you've seen that sort of bounce and things begin to slowly improve in the sector of the market we're in. And what will happen is you'll have this catch up, because for the last 50 years these two indexes have tracked. So you'll have this massive catch up. So what it's setting up as a 1 in 10, 1 in 20 year buying opportunity for not just us, but all of the better quality gold developers that are out there, because right now most of them, including us, are trading at 25 cents in the dollar. And just to sort of show our history since listing, so what I've got here is just our share price in orange. We listed in July 2019 at 3 cents. We did a lot right, not everything right, but we made a couple of discoveries. We got some drill rigs and drilled aggressively. Share price was up tenfold. We raised $40 million at 28 cents. And then around about early 2022, you had that correction in the market where you went into this bear market for explorers. And look, we still did a lot right. We put out a 1.8 million ounce resource, upgraded that to 2.8 million ounces, 4.5 million ounce resource in Ecuador. And really, if the market is not conducive, it doesn't matter. So we've slid all the way back down with this market. Recently you've seen us bottom around 3 months ago. I think, this $10 million strategic investor saw a little bit of a pop. And right now we're going through that cleansing phase just at the start of another bull market. And look, over the next 2 or 3 years, I think we have conditions like we did in 2019 to 2021. We'll do a lot right. But to be honest, it probably doesn't matter if we don't do everything right, because, when the market has that wind under your sails, over the next couple of years, really, there's a window for us now to get back to our highs and above those as we get the project into production. I'll talk about San Juan, and I'm going to pass over to Sergio to talk to the next couple of slides, because they're probably the key points about Argentina.
Thanks, Kris. Talking about San Juan, the project is just 1 hour from the capital of the city. San Juan has been chosen as the best mining jurisdiction in Latin America, so we are really happy to be there. The project is very close to the road. Basically, we are only 1 hour from the city, and we don't have snow, we don't have glaciers. So all the environmental things around the project are spectacular. About Argentina, Argentina has a new president since the last month of last year. President Milei has changed a lot of things in the country, like a lot of people around the world are talking about his view. There are a lot of companies that are going to go back to the country and invest. In my personal view, I was invited to the president inauguration last year. I was one of the only 200 invitees the president had, so we are very close to the president. But in Argentina, mining is federal. So we have a very good relationship with the government of San Juan, which is very important. We've done a lot of things together, and Sonia Delgado, our executive director on the ground, is taking care of that. Going to the next slide, Kris, can you?
Yep, there you go.
basically, we owned a big package of land when we started this project together with Kris. We have the red dot over there. We started drilling, and because of the relationship with the government, we acquire all the green tenements on mining leases you can see there. So Waliland is now sits on granted mining leases. We also bought 20,000 hectares of land, so we also own the land of Waliland. And now recently with the EPEM, which is part of the government, we've been granted the pink property and the pink mining lease. You can see there, it's next to the mine, and it's going to be very important for us on the next discoveries. So thanks, Kris.
Thanks, Sergio. So look, I'll talk a little bit about Waliland, the project, and I won't be too technical. So 2.8 million ounce resource, and you've got that high-grade core of 1.5 million ounces at 5.6 grams gold. And to put that in context, the average grade of gold being mined around the world at the moment is about 1.2, 1.3 grams. So the grade we've got is about 5 times higher. Low geological risk, we've done that 240,000 metres of drilling. Most of that resource is in what's called indicated category that we can bank as a reserve once we've done a pre-feas. And you can see from the heat map there, pink is high grade, so is red. It's open in all directions. If this project was sitting in Kalgoorlie in Western Australia, it would have been drilled down to 2,000 metres, and it's probably 7 or 8 million ounces. And on the right just shows the sort of, what the resource looks like at different cut-off grades. A lot of flexibility is the key word. You can look at this as a large low-grade deposit, a small high-grade deposit, or anywhere in between, depending on the gold price. So it doesn't matter what the gold price does, this will be the next mine in Argentina. Now, how do we develop it? When we went to look at how do we put the project into production with our scoping study, it was a terrible time in the market. We took the view that if we come to the market with a $300 million, 150,000 ounce a year, big mine scenario, we'd never fund it. So we took the view that the scoping study, development had to tick some boxes, which was more than 100,000 ounces a year annual production. It's done that, 140,000 ounces gold equivalent annually. Quick payback period, it's done that. We get our money back from putting it in production in just over a year. Low upfront capital, very important in the current climate, 134 million US. Strong cash flow, at that all-in and low cost, at that all-in sustaining cost of $830 an ounce, we're generating, it's a $1,500 an ounce margin on 120,000 ounces. That's 200 million a year cash flow pre-tax, which makes our market cap of 65 million US look pretty silly. And obviously a high IRR in the project as well, really high internal rate of return. The production statistics are there. Probably the key is low risk as well. We've got 6 months production sitting on the stockpile before we start processing ore. So if anything goes wrong, we've got a buffer. EBITDA over the life of the project of $1 billion Aussie, and then that NPV, that pre-tax NPV of 629 million. On a fully diluted basis, that's 42 cents a share again, which makes our share price of 7 cents look quite silly at the moment. And then if we look at what's that NPV at spot, it's $1.1 billion, which makes that share price look even more out of whack. I won't talk to the stats, they're there. Where do we position? So what I'm showing you here is these are the ASX gold producers with their annual production in bar chart. We fall inside the top 20 ASX listed producers, and you take a look at those two companies either side of us, Gold Road and GMD. They're both $1 billion market cap compared to our $100 million Aussie market cap. How do we mine it? Again, the key is low risk. So it's got 3 small single pushback open pits. It's far less risky to start with an open pit. We then go to 3 separate underground mining areas, all with separate entrance and exit, and we're using 100% paste backfill, so the risk of rock falls and collapses is low. And with those 3 separate mining areas, we only need 2 of them to meet our mine plan. So if something goes wrong, we've got a buffer. And then in terms of how do we get the ore out, it's vanilla, 100-year-old technology, crush the rock, gravity, and then standard flotation. It's all off the shelf. There's nothing difficult, nothing new, which in mining is what you want. You want something that the last guy has done before you. And then that scoping study that we've put out, we've got a pre-feas which is due in September, and you'll see a significant increase in value. That scoping study was really the base case. Where does that lift come from? So because we focused on that high-grade core to keep costs down in the scoping study, we've left 1.7 million ounces of gold in the ground. We'll recover a lot of that with a heap leach circuit now. The initial test work's been encouraging. We're just finishing the test work now. The ore body contains about 260,000 tonnes of zinc. When we did the scoping study, the work we'd done had shown that unless we had a zinc grade of 1.5% zinc, we couldn't recover that zinc economically. Post the scoping study, we now know that we can recover the zinc down to a grade of about 0.5% zinc. To put that in context, of that 260,000 tonnes of zinc, we recovered 60,000 tonnes in the scoping study. If we can recover half of that additional 200,000 tonnes of zinc at the current zinc price, that's $350 million US worth of value, which is basically almost the scoping study valuation again. Everything was conservative. We did all of the mine optimisation, underground and open pit at $1,700 gold. That's obviously too low, so we'll pick up a lot more gold. And then we were selling, because it's flotation, we were selling what's called a gold concentrate. The challenge with that is you only get paid about 90% of the value of the gold in concentrate. If you're selling gold bars, you get paid 99.75%. And also you've got to ship that concentrate from Argentina to a smelter either in Asia or in Europe. It costs you about $100 an ounce. We've now completed the test work where we can take that concentrate and turn it into gold bars on site, and that rips another sort of $100 million costs out of the project. And importantly, we've got to stage that CapEx so that when we come with a much bigger scenario, producing plus 150,000 ounces, it is a small upfront capital, and then we can build the rest of the mine out of cash flow. And this is just visually what it looks like. So the brown is the scoping study mine plan, the small open pits and the high-grade underground. And the pink or purple is what we're working up now, a much larger pit, still with significant underground. That gives us flexibility. We can bring in that high-grade underground up front. We can bring it in when we start to have a gap in the high-grade ore, but gives us a lot of flexibility. And obviously you recover a lot more gold, you increase the value. And then, probably the exciting part, that 2.8 million ounces we've got sits in a sort of 2.5 kilometre by 1.5 kilometre box. And really for the past 4 years, up until about 8 months ago, we'd been focused exclusively exploring where we knew the mineralisation was. We had 9 rigs on site. We're basically drilling it to get a resource. And it's only in the last 6 to 8 months we've started to look outside to see if there's another Wallilam there. Exciting results. We've got high-grade material 10 kilometres north, 50-gram material at surface. 2 kilometres north of the resource, we've got 26 to 20-gram material at surface. And when you go and look at that material, we look up in the hills, and that entire 2 kilometres north of the resource has got old workings up in the hills, which sort of says the mineralisation extends another 2 kilometres north. And we see the same thing in the south as well. So, there'll be another Wallilam there. We've got 30 kilometres of prospective sort of, stratigraphy, the same as that which hosts Wallilam. And it's really, only in the last 6 to 8 months that we've started to look at that. We've already got some exciting targets. Now, the other big exciting target is, about a month ago, a lot of the area is covered. It's got thin sort of transported sand cover over it. What that means normally is it's difficult to explore under because that transported cover bears no relationship to what you've got below. We've been trialling a new technique called iron leach, which is designed to pick up mobile metal ions and see under that cover. And what that's done is it's defined this big copper anomaly, 5 kilometres long. That anomaly is still growing and open. We think we're only just into the high-grade core. And, that anomaly, it's got the sort of same signature you get with some of the largest copper deposits in the world in arid regions. It's got a coincident iodine anomaly. Iodine is a pathfinder for some of the larger copper projects in the world. You take Chicamata in Chile, which is the world's largest copper deposit. That's a coincident copper and iodine anomaly. Broken Hill, which is what started BHP, was also a coincident copper and gold anomaly. So, we're working that up now. You can see the grey lines are where we've got a sample. The blue dots there in that map are where we're waiting for results. But, we're going to have a really exciting target to drill in the next 3 or 4 months. And likewise on the regional gold anomalies, we're still sort of doing that work, but we are picking up some exciting targets as well. So look, I'll talk about Ecuador now. I'll pass over to Sergio to sort of tell you why Ecuador is such a great place to go and explore.
Yes, well, basically Ecuador as well as Argentina changed the president. So the new president of Ecuador is doing some changes. We are, again, a very good place to be. We are in the province of El Oro. As well as Argentina, Ecuador is about political connections. It's about the team you have on the ground. There we have Carolina Orozco, which is the president of the mining chamber of Ecuador, and at the same time, she's our country manager. We all the political connections, very close to the president of the nation, and we think that with this change, Ecuador it's going to become a very good country in order to invest in mining projects. Thanks, Kris.
Thanks, Sergio. And I'll quickly roll through. So look, where are we? Probably importantly, we sit 6 kilometres from a 25 million ounce ore body, Lumina Gold's Cangrejos, and the best place to find a big deposit is near a big deposit. We started 5 years ago, 2 or 3 years grassroots, started drilling in 2021, and we've got a 4.5 million ounce resource now that we announced last year, open in all directions. And look, we have made the decision to divest Ecuador. We'll finish this resource program. We should get a big lift in resources, and really the Australian market doesn't understand porphyries, doesn't understand South America. We're not getting value for Ecuador. So by monetising it either via a trade sale or a fresh listing, which is Ecuador only, will force the market to accept the value there. What have we got? So on the right is a map showing the geology. These are gold in soil anomalies. That 4.5 million ounce resource is in that black box there. It's 2.5 of the 15 anomalies. And then you can see the drill results. We'll focus on these 2 anomalies on the north where we've got, some 500 and 700 metre intersections. We've got an 8,000 metre program there, which should significantly increase the resource. Just showing you, we do have a high-grade core. This is the cross-section through our resource. Purple is high-grade. We've got this coherent high-grade core at surface. We know that goes right to the top of the hill there. We haven't been able to get a rig up there, but very important. We've got this high-grade core of 1 million ounces at better than 1.2 grams, which you need to start up a big porphyry project. And this is just the current drilling. So what we've got is 2 anomalies here. They're both 600 metres long. We did about 15,000 metres of drilling, wasn't closely spaced enough to get a resource. Again, you can see those results, 770 metres at 0.4, 400 metres at 0.6 grams gold with a high-grade zone in there. Mineralisation from surface to the end of the hole. We will finish that drilling around about October and have a resource out in November. And to give you some context, we wrapped exploration targets around those 2 anomalies pre-drilling, and it was 400 million tonnes at about 0.5 gram gold. The drilling indicates that's what we expect to find. So there should be a big lift to resources there. I won't talk too much about the context of the geology. I'll quickly touch on ESG, which we haven't spoken about, but it's very important. In Ecuador, when we got there, we had really big problems with acid mine drainage. You can see that photo there. The water coming out of the old workings was really the same colour of blood, and probably the nicest thing I can say about it is it had a pH at 2. If we had been in the States, the EPA would have shut us down. It cost us $600,000, and look, it was initially a pain because it cost us $20,000 to run this water plant. You can see the bottom sort of self-serving photo of the fish in the last holding tank before we now put drinkable water back into the river. That water plant has turned out to be a real asset. What's happening is the Environmental Ministry and the NGOs have been sending all these teams down to look at us and how responsible mining can be part of the solution, not part of the problem. And look, to wrap up, why invest in Challenger? We've got some strong news flow and several catalysts in the short term. You can see those catalysts on the right. There is a massive disconnect in the market between our fundamental value and what we're trading at. We've got a $600 million NPV via market cap of 100. Our peer group's trading at $55, $60 an ounce. If Hualilan was in Kalgoorlie, we'd be trading at 30 cents a share. There's no value for our Ecuador assets. We plan on fixing that with a TSX listing, which will sort of go to a market that understands South America, and that decision to monetize Ecuador will force that value. There's potential for a big positive surprise in the Hualilan pre-fees, which is due in September. And as Sergio said, Argentina's transforming before our eyes into the premier, it'll become one of the premier mining jurisdictions in the world. And look, gold, it's just the right time for the commodity now. So look, thank you. And I'm happy to open up the floor for any questions for the next 4 or 5 minutes.
Great, gentlemen. Thank you so much for that. Exciting times where you are. Let's talk a little bit about why does the Australian market disregard South American assets? How's that possible?
It's one of those things. Australia is very, Western Australia's focused. It's historically been that. I don't think, one, it's in a different time zone. There haven't been the big successes in the Australian market out of South Africa. The Australian market's seen successes in Africa, successes in Australia, but it hasn't really seen the big successes where someone's taken a discovery through to production, and therefore it just tends to discount them. And the same thing on porphyry assets. The Aussie market, it always has just not understood porphyry assets. In hindsight, I think we probably should have listed on the TSX initially, and we wouldn't, have these problems. But that's an opportunity for investors.
Yes, absolutely. Talk a little bit about how you're doing with financing, especially with the interest rates at the rate that they are right now.
Look, in terms of us for financing, so we've just taken $10 million from 2 strategic investors. When it comes to mine financing, the beauty we've got is that really quick payback. So, for us, we can go and take $150 million of, might be 10, 12% interest, debt. And if you're paying that back in 12 or 18 months, it doesn't really matter what the interest rate is. So, again, the quality of the project with that, really quick payback will actually, it covers off that risk of, of higher interest rates and makes it, eminently doable.
And how do you plan to keep the operative cash cost online with other global mining?
I mean, look, the cash cost, it's really a quality of your grade, a quality of the ore body. In terms of how do we keep it, look, that cash cost in the scoping study was lowest cash cost quartile. As we go to a bigger mine with an open pit, you probably see costs, even though we're treating lower grade, stay similar. The cost of getting a ton of ore out underground is about $60 a ton. You look at our strip ratio and the cost of getting a ton of ore out open pit is $20 a ton. So you see a reduction. The fact that we're using heap leach to recover most of the lower grade material, or we will, it's a well-known, low cost technique. So, look, it's just a case of the ore body will tell you what the cost is. And with us, we're doing a bunch of optimization now for the studies, but effectively we're just lucky that we've got a quality ore body.
And talk a little bit about, I know you mentioned it earlier, but how are you faring geopolitically where you're exploring? Are there any issues with the local government?
I'm going to pass that to Sergio. I suppose my overarching comment is that if it was me doing this by myself, we'd probably have problems. But the fact that it's Sergio and Sonia doing it, I've never seen anything run more smoothly.
Yeah, in Argentina, there's a thing called RIGI, which is a big law that it's going to be enforced hopefully in the next couple of weeks. It's going to be a big change because it's a regime for big investments. So basically, you have to be above $200 million and below $1 billion, which Challenger is going to be along those numbers. So there are a lot of things that are going to change. The government is going to be way more flexible, and they are looking for attract big investments to the country. So we are sure that this is going to happen in the next couple of weeks.
And how does the drill exploration costs on the project vary by region?
Yes, look, in Argentina, we originally started, we were paying about $160 a metre. I think the cost of our last quote now, we've got some geotech drilling going on. It's about $180 a metre US. In Ecuador, it's about $125 a metre. Compare that to your average costs in Australia of diamond core drilling are around about 170, 180. So look, Argentina is competitive on the world stage. Ecuador at the moment is actually very cheap.
And so the scoping study uses NPV5. Audience member asks, would NPV10 be more appropriate? Can you explain?
Yeah, so look, the reason we use NPV5 is the entire Australian market, and the analysts value Aussie gold companies using NPV5. In the current interest rates, look, we'll probably do NPV8 or 10 if we, when we list in Canada, but it's a case of how do we come out with NPV10? Then, what would happen is we would have all of the analysts saying, okay, well, can you tell us what the NPV5 is? Hence, we use the standard in Australia. If we redo that scoping study with NPV10, you don't lose a lot of value because we've got most of that cash flow in the first 5 years up front. So there's not a big drop from NPV5 to NPV10.
Well, perfect. Well, what an interesting time to be in your industry. We appreciate you coming on the conference. We have more questions, but we're out of time, so we'll send them to you so you can answer on your own. But thank you so much for joining us, and please come back again with some future updates.
And thanks for having us.
Thanks, Anna.
All right, you're welcome. Okay, everyone, stay with us. We'll be right back with Aston Minerals.